When people think about Asia's most competitive nations, Singapore almost always tops the list, a global hub for finance, technology, and innovation. But in 2025, Malaysia is rising faster than many expected. With stronger economic growth, lower costs, new special economic zones, and a rapidly improving competitiveness ranking, Malaysia is no longer just Singapore's neighbor, it's becoming a real contender in its own right. The question is, can Malaysia truly compete with Singapore, or will the gap in governance, innovation, and global reputation still hold it back? Let's break it down. 1. Economic growth potential. Malaysia's GDP growth in 2025 is forecast between 4% and 4.8%, higher than Singapore's projected 2.6%. While Singapore is a mature economy with slower growth, Malaysia still has room to expand rapidly, especially in manufacturing, exports, and services. This faster pace helps Malaysia catch up gradually in relative terms. However, higher growth rates do not mean Malaysia will surpass Singapore's wealth per capita soon. Singapore remains far ahead in living standards. Still, Malaysia's growth trajectory gives it the momentum to compete more strongly and attract investors seeking faster returns in emerging markets. 2. Competitiveness rankings. In 2025, Malaysia jumped 11 spots in the IMD World Competitiveness Ranking, reaching 23rd, its best position since 2020. This reflects improvements in government efficiency, economic performance, and business environment. Singapore, meanwhile, consistently ranks in the global top 5, benefiting from its world-class infrastructure and institutions. While the gap remains, Malaysia's rapid climb signals meaningful reforms and stronger investor confidence. If Malaysia sustains this momentum, it could challenge Singapore in specific industries, particularly cost-sensitive ones. Competitiveness improvements are vital because they show Malaysia is no longer being ignored in Asia's economic race. 3. Cost advantage. Malaysia's biggest edge over Singapore lies in costs. Land, wages, and operational expenses are significantly lower, making Malaysia highly attractive for industries such as logistics, manufacturing, and data centers. For companies that want Singapore's connectivity but need scale and cheaper inputs, Malaysia offers the best of both worlds. For example, firms often establish headquarters in Singapore for global prestige but locate factories or warehouses in Malaysia. This hybrid model is increasingly common. Malaysia's ability to market itself as a cost-efficient extension of Singapore gives it a competitive advantage in attracting new investment. 4. Johor-Singapore Special Economic Zone. The Johor-Singapore Special Economic Zone, SEZ, announced in 2025 is a potential game-changer. It allows Malaysia to leverage its geographical proximity and lower costs while benefiting from Singapore's reputation and global networks. The SEZ could attract multinational corporations that want operations in both countries but prefer to expand manufacturing, IT, or services in Johor. This collaboration transforms competition into a strategic partnership, but it also shows how Malaysia can compete by being complementary. If implemented efficiently, the SEZ may shift some business activity away from Singapore into Malaysia, boosting Malaysia's global competitiveness. 5. Talent readiness and workforce. Malaysia is rising in global talent rankings, jumping 8 spots in 2025 to reach 25th. Singapore, while still strong, has seen a surprising decline in certain areas of talent competitiveness. Malaysia benefits from a large, young, and increasingly skilled workforce, supported by improving education and vocational training. However, brain drain remains an issue, with many Malaysians seeking jobs in Singapore. If Malaysia successfully raises wages, offers better career paths, and retains its skilled professionals, it could compete effectively with Singapore in technology, healthcare, and services industries. Talent will be Malaysia's critical battleground in 2025. 6. Foreign investment attraction. Singapore has long been Asia's top destination for foreign direct investment, FDI, but Malaysia is making strides. Its cost advantage, improving business climate, and new incentives under the Madani economy framework are appealing to investors. Malaysia is targeting high-value sectors like semiconductors, green energy, and digital services. With global companies diversifying supply chains due to geopolitical tensions, Malaysia is well positioned to capture industries seeking alternatives to China. While Singapore remains the finance and headquarters hub, Malaysia is competing to become the preferred regional base for manufacturing and large-scale industrial investments. 7. Infrastructure development. Singapore's world-class infrastructure is a benchmark, but Malaysia is catching up with new highways, ports, and digital initiatives. Projects like the East Coast Rail Link, expanded ports in Johor and Penang, and better digital infrastructure enhance Malaysia's competitiveness. Malaysia also has the land to expand industrial and logistics hubs, something Singapore lacks. While execution and consistency remain challenges, Malaysia's infrastructure investments create opportunities to host industries requiring space and scale. If Malaysia ensures efficiency and reliability, its infrastructure improvements can make it an attractive complement or competitor to Singapore's compact economy. 8. Innovation and technology. Singapore dominates in R&D, innovation, and advanced technology sectors due to its strong institutions, global reputation, and talent pool. Malaysia is investing more heavily in digitalization, AI, and green technology, but still trails Singapore. However, Malaysia's strategy is to position itself as a cost-effective innovation hub for emerging technologies, especially in manufacturing automation, green energy, and biotech. Malaysia's steel industry, for example, is targeting a fully green transition by 2050. If Malaysia continues prioritizing innovation incentives and builds stronger research industry links, it can compete in niche tech areas where Singapore has less scale. 9. Tourism and lifestyle appeal. Tourism is an area where Malaysia can rival Singapore more directly. Malaysia's diverse landscapes, cultural richness, and affordability attract millions of visitors annually. Singapore, though smaller, markets itself as a premium destination with iconic attractions. In 2025, Malaysia's strategy is to enhance ecotourism, medical tourism, and cultural experiences to boost visitor numbers. Additionally, Malaysia offers a lower cost of living, which can appeal to expatriates and retirees, making it more competitive as a lifestyle destination. By balancing affordability with development, Malaysia can draw both tourists and long-term residents away from Singapore. 10. Policy consistency and governance. One of Singapore's biggest strengths is policy consistency, stability, and ease of doing business. Malaysia has historically struggled with bureaucratic red tape, frequent policy changes, and political uncertainty. These factors can deter investors despite Malaysia's many advantages. In 2025, Malaysia's improved competitiveness ranking reflects progress in governance efficiency. If Malaysia continues strengthening transparency, rule of law, and investor protections, it can begin to rival Singapore in governance. However, without sustained reforms, this gap will remain Malaysia's biggest disadvantage. Policy stability will ultimately determine whether Malaysia can compete at Singapore's level long-term.